Welcome to the Transparent FX Academy. I'm Nick and I'm a top author trading with over 190k reputation points. In this video, I will be speaking about USDJPY. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, so essentially what hedge funds and the big players in the market are doing and how they're moving their orders. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. So this is definitely a video you do not want to miss. If you're new to the channel, make sure to subscribe. This is the place to be for high quality free trading education. Now, without further ado, let's jump straight onto the charts. Starting here from the monthly time frame, what we can see is that we have a market which at the moment is testing a quite strong monthly demand and support area. From here, in fact, all this previous rejection to the upside was created. At the moment, the market is testing the same zone, has already started rejecting it to the upside. And in a situation like this, we could expect more bullish price action to be created away from this zone. So the monthly time frame is definitely quite bullish and more bullish price action could be expected. At the same time, however, we must notice how the nearest resistance that the market will find here, if we drop down on the weekly time frame, is exactly at this previous high. This previous high is in fact a quite strong supply and resistance zone. From here, all this previous move to the downside was created. So we do have room for more bullish price action, but that would be all the way up to this resistance zone, because then from here, we could expect a reaction to this resistance zone. So there is a bit more bullish price action to be created, but the nearest resistance is currently at this area. Dropping down on the daily time frame, what do we see? Now, from a daily perspective, the situation is quite clear. We have in fact a strong impulse followed by a correction, and now the market has already started the continuation to the upside. Now, in general, after an impulse, if you want to measure the correction, you have to take your Fibonacci from the low to the high of the impulse leg. And if we do that, we can see how we have the 0.786, 50%, and 0.618 Fibonacci retracements, all lining up exactly at this area, which is also the previous daily resistance from which this red candle was created, that now that the market has broken it to the upside is turned support here. So actually the market is currently testing and rejecting a quite strong confluence of support zone, inside of which we have both the Fibonacci levels and the previous horizontal resistance turned support. So we have confluence of support all inside of this zone that we could expect this market to potentially reject to the upside. Now, if we go and see what we have when it comes to the commitment of traders, so the COT data, so essentially what hedge funds and the big players in the market are doing, and we check the data precisely for the JPY, the first thing that we have to keep in mind is that if we're checking data for the JPY, we're actually already checking JPY USD, because all currencies on the spot are traded against the USD. So since we're analyzing USDJPY, we simply have to reverse everything. And what we can see here is that we went from having minus 55.5k net positions down to minus 120.7k net positions, showing a clear decrease of the net positioning, making the JPY weaker, with 4.5k shorts added from an institutional perspective on the JPY with the last report, and 4,600 longs getting closed. So the JPY is getting weak, and that is making USDJPY stronger. So in a situation like this, what I would expect? Well, as usual, trading is reactive and not predictive. And I also spoke about USDJPY quite a few times in the past. I spoke about it after this impulse and correction. From here, I explained all the reasons for which we could expect this move to the upside, which is in fact exactly what the market gave us. And by the way, you will find that previous analysis linked in the description, so you can go and check it out for more free education. Now, continuing with the analysis, as I was saying, what I would expect in a situation like this? Well, as usual, trading is reactive and not predictive. The monthly, weekly, and daily time frames combined with the COT data. Those are the best time frames when it comes to the directional aspect of the market. However, when it comes to identifying early shifts in the trend of a market, the best time frames for that are the intraday time frames, so 4 hour and lower. Therefore, what I would expect is that if this market would shift from an intraday bearish to an intraday bullish market, at that point, I wouldn't be surprised to see a potential push higher, completing this daily impulse correction and impulse pattern to the upside. Now, if you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website, which you find linked both in description and on the main page of my YouTube channel. Here, you have the possibility to gain access to the most complete, all-inclusive mentorship program that I have created for you. As soon as you open the website, you will see this video breaking down everything included in the mentorship program. And in the program, you have the possibility to gain access to all my courses and also to the software, so the COT data software, which is exactly the one that we used in this analysis, the trading station software with Telegram signals integration, which puts together everything that you need as a trader all in one interface. You also have the possibility to gain access to one-on-one private mentoring directly with me, so you will have my personal contact. And if you continue to scroll down on the website, you will see that directly from the website, you will have the possibility to register and gain automatically access with the email and password that you will create during the registration process. So at least I suggest that you go and check it out right now. The link is both in description and in the main page of my YouTube channel, and I will see you in it. If you enjoyed the video, make sure to drop a like and also let me know in the comments below any new pairs or topics that you would like me to cover in the next videos. And I will see you in my next breakdown.